engineering conglomerate L&T came out with their quarterly numbers, and their profits was aided this time around on account of the sale of their ENA unit to Schneider Electric, but it was definitely impacted on account of the pandemic as well as the financial services business and the disruption at the metro services. So profits came in lower by about 45% to 1,410 crore rupees. The consolidated revenues were lower by about 12% on year to 31,034 crore rupees, and that was largely impacted on account of the pandemic, although the management did say that their labor at various project sites is now reaching pre-COVID levels. The operational performance was rather encouraging. In fact, the margins on a consolidated basis came in at 10.7% versus 11.3%, with the EBITDA at 3,334 crores, down 17%. The company's consolidated order book stood at 2.99 lakh crores at the end of the quarter, and they bagged orders worth 28,039 crore rupees at a group level, which on account of the pandemic was lower by nearly 42%. The international orders during the quarter constituted about 36% of their total order inflow. Now, in terms of their segmental outlook, the infrastructure segment revenues were lower by 20% on year on account of the bid deferrals as well as the loss in some of their select prospects, which impacted their order inflow. The power segment revenue was up 42% on account of the higher order book at 687 crores. The heavy engineering's revenue was just about flat, down 3% on account of deferment of orders in the nuclear as well as the hydrocarbons business. The defense engineering revenues came in low by 20% at 765 crores. They said that there was tapering execution of a key gun order in the current year, while the new orders are yet to gather execution momentum. The hydrocarbon segment recorded a revenue at 4,044 crores, down 6% on subdued tendering activity and uncertain oil prices. The IT and technology segment saw revenues at 1,167 crores, up about 5%, led by L&T Info, and the financial segment revenue was down by about 3%. The management did acknowledge that it was not just internationally but domestically as well that they did see an impact of the pandemic. Their labor mobilization, though, has now moved quite well, and their labor at various projects has now reached the pre-COVID levels. They have also had an exceptional item for the impairment of the heavy forgings unit at 2,320 crore rupees, and the management said that this quarter actually represents a road to revival after the pandemic has been hit. They've collected close to 30,000 crores of cash in Q2, and overall said that as of now they cannot give any guidance because it would be like shooting in the dark. They need to be backed by credibility. Only then will they give guidance when things start to actually stabilize. So the management saying they will maximize opportunities, but as of now cannot state when they will hit pre-COVID levels.